What if I told you that every time a war breaks out, the rich don't panic? They prepare. While you're wondering whether it'll raise petrol prices or crash the stock market, they're already making moves, strategic ones. Because in the world of money, war isn't chaos, it's opportunity. Still thinking hiding cash is a war strategy? Let's break that myth. Because the financial war is invisible, but it's happening right now. History has shown us oil prices skyrocket, gold becomes the new oxygen, stock markets swing like mood swings on caffeine, and your money? It reacts faster than your brain does. But the question is, do you even know how? Because not knowing could mean losing 5 years of savings to inflation, missing the best investment entry points, or worse, thinking you're being safe when you're actually sinking. Let me show you what the smart people do during wars. 1. They move their money, not emotionally, but strategically. Example. During the 1990 Gulf War, oil prices more than doubled within months. Guess who profited? Energy companies and their shareholders. In the 2022 Russia-Ukraine war, global investors rushed to buy shares in defense companies like Lockheed Martin and Raytheon. Their stock prices surged while the world held its breath. They're not guessing, they're calculating. If oil spikes, which companies profit? If currencies weaken, which assets rise? They ask questions. Then they place bets, not on luck, but on logic. 2. They don't hoard cash, they hedge it. Holding cash during war seems smart, right? Wrong. Inflation eats it alive. Take World War I. In Germany, the value of the mark collapsed. People carried baskets of cash to buy bread. That's what inflation does. Modern investors hedge using short-term debt funds, gold ETFs, commodity-backed securities. Not because it's trendy, because it's tactical. 3. They follow the wartime wealth flow money. During wars moves in a pattern, from volatile equity to safe havens, like gold, bonds, and USD. From consumption to protection sectors, like defense, cybersecurity, energy. During World War II, U.S. government bonds were heavily bought by civilians. And guess what? Many doubled their savings quietly. In 2020, during the pandemic-turned economic war, investors moved into tech and pharma, anticipating global dependency. That's wartime strategy in disguise. And the wealthiest, they ride this flow, while everyone else drowns in fear. 4. They diversify geographically. What happens if your country is directly impacted by war? Smart investors spread their assets globally. During the Iraq War, many wealthy Middle Easterners invested in real estate in London and Singapore. When bombs dropped, their wealth didn't. That's not just privilege, that's planning. You don't need to be a hedge fund manager to play this game smartly. You just need to stay aware, think ahead, and apply timeless principles. One of those principles? The Rule of 72. If war made you realize how quickly your money can vanish, the Rule of 72 will show you how fast it can grow. It's the shortcut the financially elite use, and it's way simpler than you think. I broke it all down in this video. The finance formula that made me smarter than my MBA friends. Click it now. Trust me, you'll start thinking like the 1% does during crisis. Because this isn't just finance, this is Cashology.